Hello and welcome to Stockwatch, your weekly news channel brought to you by Bitesize Investments. As we look back upon this week, these are the main headlines for the Magnificent Seven. Microsoft is reportedly crafting a network card similar to Nvidia's ConnectX-7 to bolster its Maya AI server chip. This production will potentially reduce Microsoft's dependency on Nvidia. This move follows Microsoft's introduction to Maya, a chip which is tailored for large language models and AI computing. Apple's revenue in India surged by 42% in 2023, with iPhone shipments increasing by 39%. India is now the fifth largest market for iPhones globally. While China remains the larger market currently, India's growth suggests it could overtake China by 2027. Google issued an apology for images produced by Gemini, admitting to instances of images which are historically wrong and potentially offensive. The tech giant halted the feature following criticism, including accusations of promoting racism. Examples included sexually explicit or violent imagery and depictions of black Vikings and a female pope. The company has pledged to address the issue by adjusting its AI image generator. Amazon has agreed to pay over $1.9 million to settle claims of human rights abuses against more than 700 migrant workers in Saudi Arabia. Investigations revealed violations of Amazon's supply chain standards, including deceptive recruitment practices and squalid living conditions. The settlement adds to scrutiny of Amazon's labor practices. Amazon asserts its commitment to safety and cites progress in reducing injury rates through its automation services. Apple entered the VR headset market with its $3,500 Apple Vision Pro, while Meta Quest 3 offers a more affordable option at $479. Not surprisingly, Meta CEO Mark Zuckerberg favors the Quest 3 for its value and superior experience, highlighting issues with Apple's Vision Pro's brightness and comfort. At the moment, it would seem Tesla is currently trading sideways on the daily charts. Analysts are debating the signs of a potential rebound. A gap between the $203 and $206 remains partially filled, with bulls awaiting an upward break and bears anticipating a downward turn. Nvidia's earnings report sparked excitement amongst analysts, with some dubbing it a landmark event for the stock market. Optimistic forecasts value the company at $2.5 trillion. Despite Nvidia's dominance, competition still threatens its margins, raising concerns about future growth prospects. The biggest stock market movers this week are Nvidia with 6.37%. Amazon are up 3.7%, Meta are up 1.24%, Google are up 0.68%, Microsoft are up 0.58%. Our biggest losers this week are Apple with minus 0.49% and Tesla with minus 4.99%. Now we come to the next segment of our Magnificent 7 weekly news update and dive into our stock focus of the week, which is Tesla. Let me know in the comments section which stocks you would like reported on during our stock watch. This is brought to you by Bitesize Investments. During this next section, we are going to examine the key metrics of the company by comparing them against businesses that operate within the same industry, as well as reviewing the bear and bull cases. In addition, we will look back at the historical share prices and find out what the target price of the company currently is. And lastly, we will then find out what the analyst's consensus is and what their forecasts are. Now we're going to jump into the 5 key pillars for Tesla, where we look at the earnings per share, which is 18%, free cash flow minus 43%, revenue per share is 17%, book value per share is 37%, and return on invested capital is 22%. Now let's compare this company with other businesses within a similar arena. The two companies we are going to compare this week are Stellantis and Ford, but let's start with Stellantis first. Their EPS is a superb 18%, their free cash flow is an excellent 34%, and revenue and book value are a modest 6 and 7%. Return on invested capital is terrific at 19%. So as we can see, the earnings per share and return on invested capital are very similar between Tesla and Stellantis, whereas Tesla's free cash flow has taken a significant beating this year in comparison. However, Tesla's revenue and book value is outpacing that of Stellantis. Now we come to compare Tesla with Ford, and Ford has a decent 9% growth for its earnings per share. A good free cash flow of 14%, a solid revenue growth of about 11%, but a lackluster book value of -1% and a static 1% growth for its return on invested capital. So Ford is only beating Tesla on its free cash flow. However, a shareholder is really interested in the book value and return on invested capital, and for these numbers, Tesla shows its skill at providing a return for its shareholders. Now let's look back at the historical share price for Tesla and see how it compares to today's price. If we go back to 2013, we can see that Tesla's stock price was trading at an average $22.20, and how it has progressed year on year with the exception of 2022 when it had an average share price of $115, whilst today it is currently at $191.97. Now let's jump into the analyst price target. Analysts believe Tesla's price target should be $223 and it is currently about $192. So it would suggest that Tesla is a little bit undervalued at the moment. Do you think this is a fair price target, or do you think it should be higher or lower? The overall analyst consensus is that Tesla is a hold at the moment, but we need to ask ourselves for how much longer. Lastly, let's look at the analyst's forecast for Tesla, and here we can see that they're expecting Tesla to have an EPS of -12% in 2024. In 2025, a positive one of 31%, in 2026, 32%, and in 2027, to dip down to 9%, and in 2028, 12%. Do you agree with the analyst's future predictions, or do you think they are completely wrong? Thank you for watching until the bitter end. Please consider liking and subscribing to help the channel grow.